traders in our VIP group get further along in their trading journey simply by taking some time to go through the things that people are individually struggling with. If that's something you're interested in, reach out to Ivan through his socials link that we just dropped in the chat, or you can find him if you're on our Discord channel. Just send him a DM. He's in there, and you can find him really quick and easy. Ivan, thanks very much for coming on the show today, man. I appreciate your contributions to our really interesting and complicated conversation today.
Thank you for having me.
All right, see you next time, Ivan. Okay, guys, next up, we got Chris Pulver taking over the show, and I believe we're going to have Frank join him as well during the show. So continuing our first big full week of the trading year. Nasdaq up 1.7%. My goodness, guys, stocks are higher here today, taking back some of those losses in December. Look at Bitcoin up 3%. My goodness, really making some stabs on risk assets here this morning. We'll see if that is set to continue. Nas up now 1.7%. It looks like it might be trying to break out here and just continue that unstoppable uptrend it's been in for a while. So anyways, quick break, and then Chris Pulver's taking over the show. Stay tuned.
Hey everybody, thanks for tuning into today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Monday. Welcome back. Markets are on a little bit of a tear this morning to the upside. That's interesting. I thought that we should mark a couple of spots here. I went through this morning in an earlier session. For the last couple of weeks of trading, we've actually seen quite a bit of direction. Let's just go to where this is all kind of disrupted in during FOMC, right? Big directional day, FOMC on that Wednesday. Let's just go back here. So let's go back to the 18th of December. We had a huge directional day there, and then one indecision day, directional day, indecision. So we've had, I'll put direction or choppy. That'll be my visual. So we've got 1, 2, 3 directional days, 2 indecision, directional, 1, 2, 3 more. 1, 2, 3 more, directional, and today so far, I mean, it started off with a huge gap. It's pushing a little bit higher. I'd say even directional. So like 8 to 2. That's a lot of direction with zooming out. You know, today's direction is encouraging. It is kind of kick things off like the first full trading week of the year. I know Thursday, I think because of Jimmy Carter, the market's going to be closed on Thursday, but this little holiday rip that we saw that pulled back into the FOMC levels, you know, all-time highs are not that far away. Okay, now does this market have what it takes to get above the FOMC decline, which is right here around 60.50? So for the bulls this week, if the bulls can take out this high, not just like come back and test it and get rejected there, okay, that would not be a good thing. But if we are going to see, okay, gap and a push higher, so gap and push higher, do we get back into 60.50? Do we actually close above 60.50? Do we close in on all-time highs again? Maybe. Okay. So the reason I'm noting these two levels is we have PCE bottoms, FOMC to holiday highs. I could see us not being directional, right? Like there's a lot of direction in here, but not really going anywhere in the big picture. So the weird part is just be aware of where we're at. You know, we're only a few percent away from all-time highs, and this swing itself is around a 3.5% move. So quite a bit of volatility kind of packed into that little space. But that's why I put on this chart. I just put two dashed lines where that holiday rejection was, and that PCE and that holiday bottom. Okay. So I could see us trading inside of here for a second. You know, like maybe this week. We have non-farm payroll on Friday. That's really the only major news that I was looking at this week. It's nice to see, you know, markets are up. I'm off to a pretty good start for the year. Here's $58,000 in, you know, 6 calendar days of trading for the new year. That's a pretty good start. But I know it's not, those aren't guaranteed profits. I'm going to have to look to make sure I'm protected. I did all those collar trades for a reason. MicroStrategy was trading at 350 today. I got it covered at 305. I'm looking to kind of do some rolls on that this morning. I want to look and see if I can just generate some income and premiums. So let me have a look at MicroStrategy for a second. I also, I'm probably going to wrap up the session today at 11. For me, I've got to call the trade desk at Tasty. Something was weird last week. I put in so I have these long calls, and this was part of a diagonal spread that I did. I've had these long calls going for a year. So my 25 long call, I've lowered the cost basis down to basically negative $1. So I collected enough premium on selling against those calls that it was a, you know, $4.80 debit that now costs me like nothing. I'm into this for like, I actually have a net credit of like $1. So what I did last week is I sold a 26.50 call against the $25, but the broker said, "Oh, we're just going to assign you 948 shares short." So that makes 0 sense. I don't know why they did that. So I need to get that resolved with them, because that's obviously not what I wanted to do, was be short the shares. So need to get to the bottom of that. Anyway, that's my to-do at 11 o'clock. But I want to take a look at some sectors today. I want to look at a roll position on MicroStrategy. So MicroStrategy, I have a collar trade, and it's right here. So I've got the 305 by 245, and this is out to the end of the month. And so if I look to roll this, let me see if I can roll this. So if I keep it for a week and go 245 and 305, and I just go out an extra week, I can still get 266 for that. If I roll the call side, interesting. So they're really going to make me pay for that if I roll it. Hang on. I could roll it for another week, take this out, roll it by another week, keep the exact same strikes, get another $2 of credit. And that's not bad. I think I'm going to do that if it will fill for like 250. Let me see if I can get 275. 275. Can I roll this? Let's find out. 275 not filling. 270. All right, just got to fill for 274. All right, I'll take that. So this one does not have the shares. I just need to go to my accounts that have the shares. So that's 103 shares. This one has shares as well. MicroStrategy. So here, quick roll out a week. Then we got filled for 270. Filled at 273. Okay, very nice. And this one's the other collar trade. Okay, so here, quick roll by a week, 275, 274. What? 270, give me filled over 270. 273. All right, I need to update that. So 273. All right, so that gives me a new break even. Rolled collar trade, which is the 305 by 245 to the 27 expiration. And that's $2.73 credit, which brings my break even lower. So the 291.20 break even is now 288.47. So it gets called away at 305. I still make 1653. So I make 1650 income. And I'll do this a couple more times. I mean, it's going to be volatile, but if I can still get $2 to $3 and keep rolling it, I'll be okay with that. So anyway, that'll be a little income play on MSTR, but I'm going to keep the integrity of the collar trade just in case. And let's take a look at some sectors. So I am curious on what's our 10-year doing today. So 10-year is up to some fresh highs. Fantastic. The disinverted 10-year in 3 months above the zero line. The 10 and the 2-year way above the zero line. Mortgages. Congratulations, your mortgage just got it more expensive in 2025. China's up a decent amount. So I saw HSI futures up 2%. Alibaba is up 2.02 on the day. Baidu up 1.88. FXI is up. I mean, we've got to have a decent looking heat map today, I would presume. Let's go heat map. NVIDIA leading the, oh, that's another one I want to look at a roll on. NVIDIA. So I have an income plan NVIDIA. I'm probably going to do a quick roll on this one as well. So 1, 2, 3, 4, 5. 140. I'm going to try to look at a quick roll. Maybe keep the strikes the same and see if it'll give me a decent premium. It's got to be worth at least $1 or $2 for me to roll it. But let's find out. Okay, NVIDIA. How many accounts? So this 140 by 130, that was my collar trade. Can I roll this? I can. If I roll it a week, I get another 48 cents. How much do I love that? Not a ton. But if I go another week, February 14th, I don't know. I mean, buckle up, everybody. I would not be surprised based on this bar count of NVIDIA that we come all the way back to this level. This is a fake out trade, I think. So, I mean, obviously anything, I can be dead wrong and NVIDIA's like, oh, all-time highs and everyone's all excited. I think NVIDIA is going to be one of the charts that it's like NVIDIA is down, expect the market to be down. I think it's that important. Like this whole idea of the story of AI, AI agents, AI spending, CapEx, infrastructure, blah, blah, blah. Everything that goes with AI is pretty much the proxies NVIDIA. I still think this bar count is crazy long. Like we haven't seen a bar count. It's back to January 2023. We're at almost 500 bars. That's a long time. So just saying, with this little surge on NVIDIA, I'll just make a, and I'll eat my words here. I said I thought we'd hit the 200 EMA before we hit all-time highs, and clearly this market is heading right back to all-time highs within 2 very strong trading days. Now I'm not short NVIDIA. I'm just saying I would not be surprised if we hit this level and we come right back down. So just be prepared for some volatility to kick off this first part of the year. Okay. I am willing to do a roll, and I don't mind having the shares of NVIDIA. That's not really what I'm concerned with. But if I roll this out to the end of February, so I'm going on another 50 days essentially. Like this to me is worth it for income. If I roll it out by another 40 to 50 days, I get an extra 250 of income. That would essentially roll me from $1.40 getting it called away to now like it'd be like getting it called away at $1.42. which is fine, or $1.4250. And that's close. That's closer to the all-time highs. I still have some protection, and there's time in that put. So let me see how this one works. That would be, flip this around. So if I get it at the 140 and then the 130, let me see if I can get a net 255 in this. Hopefully 250 or better. Let's go out to the end of March. I mean, if I don't do anything, I can just let it get called away in a couple of weeks. But if I can roll it and still have protection on the put side, then we can play around with the break evens. So let's see. Let's see if I get 255 for this. 255 not filling. And the nice thing is this is pretty darn liquid, so hopefully I can just get, for pennies different, I can get this one filled. Hopefully no. All right, 253 just got filled. Very good. So I have some shares. I'm going to do a quick roll on this one. Did I roll that out to March? I did. Okay, so now rolling this out to March, 253. 252. Come on. 251. All right, just do it. I gotta do a couple more accounts here for the rolls. So let me double check. That one's good. This account ready to roll. 251 filled. Come on now. Filled at 250. This should be the last one that I need to do. Nvidia. Okay, that's it. All right, so now quick update for the tracker. Rolled collar to 321. $250 credit. So the new break even is 134 minus 250, so 132. All right, so if I get it at the 140 called away, it's 786 per account, per share. All right, I'm fine with that. So a couple rolls there. MSTR rolled, successful. NVDA, successful. I want to look at some sectors this morning, see if we hit all-time highs on NVIDIA. Set a chart alarm there. All-time highs, fake out or real push. Could be exciting for old NVIDIA. Let's have a look at some sectors here. XLC, I put in an income trade out to March. XLY, I'm not looking to scoop. The ones I'm actually most interested in, XLE, I'm going to look at the IV on this one. I'm going to look at an income trade. This is a good one to have in the portfolio as a bit of a diversifier too, like not as correlated to the S&P. I'm going to look at an income trade here. Let me look at XLE. XLE trading at a 37.3 IV rank. I think some of the other ones are slightly higher than that. XLF, I think we need to fall a little bit more. XLV, this is healthcare. I want to see if this one drops more aggressively. I don't know if it's going to, but I like to see healthcare settling back into like the 120s. Industrials, materials, same thing here. Like, could I own some XLB around like 75 bucks? XLB. A 52. I mean, I could probably put a ratio spread on this one in the 70s. Would materials be that beat up? I mean, anything can happen, obviously. 2022 bear market lows. If I could own some XLB like at 2022 lows, that wouldn't be a bad spot. So $68 or less. See what I can create a trade here. Go out. Let's go 45 days. Anything in the set. I don't think the premiums are going to be probably garbage. That was my concern. So 70. Ugh. These are so bad. So the $70. Nope. Fudge. Yeah, these premiums just aren't good enough. So if I buy, sell, sell, still a debit. I don't like it. Well, I guess it's just going to be dollar cost average. Real estate, tech needs, I want to see a pullback in tech if I can. Utilities. Anyway, energy might be the one that I like the most. Anything in the $80 or less. Let's check XLE. If I went out 46 to 74 days, what's the level I'm working with here? Pretty strong support around the $80 to $76 zone. I mentioned this morning in one of my earlier sessions. Like XLE is like 45% of it, weighting wise, is Chevron, ExxonMobil, and like ConocoPhillips. It's 3 stocks that are 45% of the weight of XLE. But 2 of them actually look pretty attractive on just the technical side. So if we go to CVX, I like that technical support around 140. If we go to COP, pretty strong technical support around 95. XOM is the one that looks like it's, maybe has a little bit further to drop around $100, but I'd say it's very well supported at $100. So individual stocks, I mean, I'm sure I can get maybe slightly better premium on individual stocks, but the prices are more expensive. CVX, more expensive, right? COP, a little bit cheaper, but more volatile. So that's why you get the sector consideration. Could I do anything around the $80 zone? That's what I'm looking at here. So $80, premiums are definitely better. If I did a ratio spread, maybe something like that. Not a lot of income. How much would I like to have XLE in my portfolio? I mean, I don't know if I want 200 shares of it, but I could do this $79 times 2, 50 cents in income. Take the assignment. I'd own the shares at 79 minus $1.50. I'd own it at 77.50. Would 77.50 be a good spot to own this? Kind of. We'd be back to like 2023 levels. I don't know. Maybe not. I don't like it that much. So never mind. All right. Let's look elsewhere. Let me find some other stocks. Let me get some questions here. Live chat. I see it's live. S&P go down on the Trump when Trump's on stage. I don't know. I mean, is it inauguration day today? Everyone seems to be pretty bullish on Bitcoin from what I'm seeing. That's totally fine. Keeping that exposure alive and well. Gold, I still like the correction level in gold to see if the dollar gets stronger. One thing that took a big hit last night was the dollar. So technically I talk about this now. Look at the dollar. I still don't think this dollar trend is done. At its best, I would say the dollar, has a quick correction back down to like the 106 or 105.50 zone. I'd still say the dollar is pretty well supported in there. So is this a potential broadening pattern where the dollar comes back into something like this and it's just a very like ugly, choppy, but difficult range to trade? I would not be really looking to say I'm bearish on the dollar. This is me talking. I'm not really bearish on the dollar unless we come back up here towards like this 114 handle on the DXY. So this is a spot that I want to stay out of the dollar chop. Obviously if it comes back up this way, that's going to help my positions like my Aussie dollar that I've scaled into. Right now, I'm essentially back to break even on the trades that I'm in. New Zealand dollar starting to behave a little bit as well, just shy of break even. I'm not holding my breath like, oh, I hope it goes up. If I get lucky on the trade with the dollar responding really like violently off these highs, that's fine. Okay, but my dollar CAD, I'm still going to hold long, right? I mean, look at that big wick. Like I should just adjust my take profit, but it's like, you know what? I think dollar CAD is still solid. I think we're still in an uptrend. Dollar Swiss, I think we still get to 92 all day. I mean, I'm considering maybe an add-on trade as well, but I'll wait. I mean, if the dollar Swiss pulls back here, previous high pulls back to like 89.50 or so, then I'll probably add another position. I'm pretty committed to that 9,200 zone on dollar Swiss. So if I can add to it, 1, 2, 3, 4, 5, 6, 7, 8 positions, I'll add to it. It's fine. So I'll wait. Something either 89.35 or even back here into like 88. Either that spot for a bounce or that spot for a bounce, or just a trend line break. We get a little bit of a pullback here, look for a trend line break, and then continue up to 92. Still going to stay the course. Results are made official. I got it. Okay. Inauguration falls on the same day as MLK Day, Monday the 20th. Got it. Cool. Isn't he going to get sentenced about something of like his 34 felonies that he might have to see a judge about a thing? I have no idea. All right. Anyway, that's some currency stuff. Dollar index, oil, gold, silver. Oil, natural gas, they are making some interesting plays. Now, I said this on oil. Oil higher is not good for inflation, right? A fake out here, a fake out here, a fake out here. Maybe this is all just the push up to then fade it again. We'll see. So I'm not ready to be convinced like oil is going higher. It's like this could be. I mean, this is 1, 2, 3, 4, 5, 6 days in a row. Well, if we had 1, 2, 3, 4, 5 days in a row, and then it smashed back down. We had 1, 2, 3, 4, 5 days in a row, and then it smashed back down. Prove it, right? Prove that there's a bull flag in oil. So if it's here and we actually stay here, then yeah, sure, oil goes higher. But if we have this like run up to then smash it back down, this is no different than what we've been watching for the last couple of months. So just be careful on some of the liquidity games and some of these shenanigans that oil prices might be having. We go to natural gas. Pretty volatile. I mean, natural gas is up, but pretty volatile the last couple of trading sessions. I'd keep a close eye on that one. Gold, I'm still looking for pullbacks. Silver's actually starting to show a little bit better posture than gold. So hopefully the gold-silver comparison is going to continue to trend lower. So if we can see gold and silver working down, that means that XAG should be looking better. So I'm still holding my SLV positions, my GC is gold futures, my SI silver futures. I'll wait and see how those play out. Bitcoin making a nice little run today. 102,000. MicroStrategy benefiting from it. 360. Anyway, just it's going to be a while. We're 1 day into this full week of trading. Market's clearly excited about something. But, you know, Bitcoin from this recent high, I thought for a moment we just kind of go high, low, pull back into a flat pattern, and then head down to like the 90 to 80K zone. Looks like this market might be determined to try to get back up to all-time highs, to test the highs and then fail. I could see the S&P doing something similar to that, right? I mean, let's say the S&P hits the FOMC level right here. We hit that level and then fall. How many of you be surprised by that? Right? We can't get to all-time highs. We come back up to the same little holiday resistance that we saw during the FOMC candle, and we're stuck with like this, kind of 3 to 3.5% range until the market decides, okay, things are better or things are worse. I don't know yet, but technically I'm still looking at the same bar counts I was looking at for the last couple of months. Eventually, if the S&P gets over 300 bars, greater than 300 bars, I just think we're on limited upside potential. I'm not saying we can't go higher, but I think it's on limited upside potential. NVIDIA is creeping up to 500 bars. I think it's on limited upside potential. Okay. So what's pushing? Look, right now, what pushes the market in January? Order flows and leaps, open interest. What's everybody doing right now? Everyone took profit in December, and you're looking at the new year. So what do? Is you put on a bunch of 12-month positions.
Hey,
so all your
Chris.
leaps. What's up, Frank?
How's it going? Happy New Year.
Happy New Year, man. How you been the last 3 months?
Pretty good.
Yeah.
Haven't been around much, I know. But
I mean, not live. I know you've been working as always, but anyway, what's up, dude? I've got about 12 minutes, by the way. I've got to get on the call. I got to get on a call trade, Tasty Trade in a few minutes.
okay.
Just because I had an interesting assignment. They shouldn't have done it. I don't know why they did. I had a $25 long call and I sold against that 26.50. It should have neutralized that call position. But I'm wondering if they did that because it was a last in, first out management. But anyway, I'll talk to them through it. See what we can try to help me resolve it. But anyway, what are you liking for? What's your big bold prediction for 2025?
Well, Bitcoin is still my bold prediction. I said 110, hasn't hit there yet. And then when it retraced and did that head and shoulders pattern, I thought maybe the trend was over, but it broke back up. So I guess now I'm going to still say Bitcoin is going to outperform the market. And that's just because I think the market will be bullish this year. So if that's the case, I think crypto is going to outperform. The altcoins usually do, and Bitcoin tends to do the same. But I think it's going to be choppy. I think we're getting overexcited about things. I think that there's going to be obviously less rate cuts than we wanted, and that was what was kind of driving the markets in the first place. So seeing that not really being or not really coming to fruition is sort of I think going to hurt us later on. But I think early this year in January we're going to see a lot of stuff rallying, especially as we swap presidents.
Yeah. Do you think, just a question, do you think that we would hit all-time highs before we see the lows that we saw during the holidays? So question is, are we hitting the highs first or the lows first? Just a thought. What do you think?
On the S&P or even the market?
Anything.
Or...
I mean, it could be Nasdaq, could be S&P. Do we hit all-time highs? We've got another 1 to 1.5%. So it hit all-time highs, the S&P 1.5%. To hit all-time highs on the Nasdaq, we would have to go up around 2.25%. Russell and the Dow need a lot more work to the upside. Dow would have to go up 5%. Russell probably way more than that because we had that huge Trump trade. This probably has to go up close to 10%, 8.5% to get to recent highs on the Russell. So do we hit any all-time highs on S&P, Nasdaq before we fade, or is it a classic bull trap?
I think based on the labor data, I can probably answer this or have a better answer for it after this week, because if wages decline, yet we've seen higher inflation, and then if we see NFP come down, as in like the revisions. If revisions come down, unemployment rate stays the same or ticks up. These are all reasons for the stock market to go lower. So I don't think we'll hit the highs if that happens. So I'm going to wait for this week to sort of show me the numbers. But so we've seen a slowdown in labor. We've seen an uptick in inflation. Just because it's a new year doesn't mean things are any different. I have yet to see the trend break on jobs and unemployment rate. We need to see either a static unemployment rate or, you know, more jobs tick lower on the rate. But that's what I'm hoping. I'm hoping for like better jobs numbers, but the fact that the trend isn't really there right now kind of shows me that I don't know, because what you're looking at right now is 227,000 jobs added, but look at these revisions. They're just very. The yellow line is the revisions. They're just
they're awful. Yeah,
off. Yeah, I don't understand how you can run is this the Bureau of Labor Statistics? How they can be so off all the time? Like, how are they missing so much data?
I don't know.
But,
I was gonna throw something out there for the job situation. I think 2025, like, what's the path to prosperity or the path to profitability for companies right now? Probably embracing AI, embracing high profit margins, embracing growth, right? Something tells me that the worker, as we know it, is going to start feeling a lot of the shift from everyone's going to move to make more money. And to do that, you're going to displace workers. I think this is the year that all happens. It all started back in COVID when it's like everything's going to be working towards automation. Now we have AI. Now we have AI agents. Workers are going to have to be able to do more productivity with less and use their chat GPT resources or all their AI, blah, blah, blah. I think this could be an interesting year where a lot of workers are starting to lose jobs. I have not been impressed with non-farm data. I was trying to get a better like visual. I'm trying to think maybe I can go back in the Edge Finder let's go back 5 years here. Let's go back 5 years.
I think looking at unemployment rate is better at this point.
Okay.
That kind of just gives you the final answer.
That's fair. So let's go unemployment rate for 10 years. There. Okay. Oops. Go back. Unemployment rate. And that's back 10 years. Okay. So if I zoom in. All right. So, yeah, I think that's something to watch where historically the last decade, like we're just coming off of the lows, like we're kind of trending slightly up. It's been pretty solid, but there's also misreadings in like if the unemployment rate starts to go higher, that's with people actively looking for jobs. What ends up happening is when people just like stop looking, they don't get counted. Like you got to be in the system to count as unemployed. When people just stop looking, it's like, oh, unemployment's like still like tight labor market. Well, if they just stop looking, I don't know. That's one of my like pseudo bearish positions for 2025, which would be where this volatility would come from. It doesn't mean that stocks can't go up. It doesn't mean that the markets can't go higher. But I could see like Main Street recession where workers getting displaced because if you don't have the skill set to be more productive, you don't have the skill set to embrace this AI, regime shift, then you're going to be faced with no job, or start your own business. I mean, I guess if you can't work for the man, then you're better off, doing something on your own and trying to figure it out. But that's probably a skills gap that not a lot of people are going to be embracing and learn how to code and start using AI all of a sudden.
But then I would think that there would be more people searching for jobs then. So the unemployment rate would go up. Like, I don't think if they just dipped out, then the rate would go down because there's less participation. But
right.
Are you saying that you think it will go up because people will get displaced by AI and have to, continue searching for other roles?
Possibly. I mean, I think that what they have known is like, this is the job that I was in, and all of a sudden that job is no longer available. Like, if you have a skill set to do a certain thing that you've done for, let's say the last 10 years of your life, and that's been your job, and all of a sudden you don't have that job anymore, and that's not available to you any longer. That's an interesting like forced change where people would have to do something totally different. So, it goes back into just, if we're a bootstrap economy, then that's, any job, and then better job, and then, maybe a different career path. So I don't know. I think this is going to be a challenging year for the average worker. Also, just I'm talking like higher, bigger picture stuff, but the let's say the bottom, take U.S. consumer, okay, the bottom 90% certainly struggling. 70% of Americans living paycheck to paycheck if there's higher unemployment on that side, but the top 10% keeping the consumerism going, sitting on a bunch of household wealth that have assets, have investments in the market. So I don't know. I think this year, two things, like AI to the employment side could be really interesting, and then the health and the longevity and the sustainability of the consumer. We keep reading about like credit card delinquencies. That's coming from like the bottom 90%. So if the higher end consumer is getting stretched in any capacity this year, that's where maybe the consumerism side starts to take a little bit of a break. So
Yeah.
I don't know. I'm just talking like it could be. I don't think 2024 and 2023 are going to look anything like 2025. So if we're lucky, I'd be surprised to see the market get 15 to 20% this year. I did post some interesting stuff. Let me see if I can find it here. This is on my Telegram. Here we go. So following a 20+% year historically, it's only happened twice in 70 years that if you've had a 20+% year in the market, it's only turned negative twice in 70 years. So if you have a 20+% year, which we did in 2024, the probability is it's going to continue to go more positive. This is rarely turns negative the year after a 20+% annual return. So there's enough momentum built into that. The last time that happened would have been 1989. So 1989 was a 27.3% year. The following year, it was down 6.5%. 1980, we had a 25.8% rally that year, and the following year was 9.7% to the downside. Every other year, it's been positive. So we are coming off of two very solid years, like 20+% the last couple of years. I could see a 10 to 15% upside this year, but I could also see, and just as I'm just trying to kind of warn investors like to get ready for some volatility. I could see a broadening pattern in 2025 where we do finish the year positive, maybe to this like 10 to 15% window to the upside. But I don't know, Frank, do you think we got a correction underway? In some capacity in 2025, we get like a double-digit correction. What do you think?
I don't know. I don't ever like want to talk about it because we can always bring it up, and we've talked about it so many times in the past, and nothing has happened.
Well,
it's
let me
almost
ask you
like
this. Where does price break? Do you have, so where would price be vulnerable to you? I mean, we've
every
seen
time it hits a new high, every time it
Yeah.
retraces and comes back to the high, that's where I think you have limited upside, and that's where I think selling call spreads is a good opportunity.
Yeah.
But when it keeps chugging higher, like say it breaks the high again and keeps going higher, I don't really know because it's uncharted territory. I understand that there's a lot of momentum, but I also know that it's going to pull back to some degree.
Yep.
So, I mean, statistically, if you've seen like the past year, buy on every 1% dip and you'll be fine. Buy at any point last year and you'd be fine. Except for, I guess, the last couple of weeks. But you know what I mean?
Yeah.
Just, just be cautious, but, you can still make your gains. I would just, I kind of want to look for individual stocks now. I think the market will sort of have its choppiness depending on the month, depending on, the same data we always see. I think it's up because it's the new year. But
Yeah.
if we end this week with bad jobs numbers, I think we're not gonna be as bullish as we thought.
What's up, guys?
Hey, what up, man?
Hey, first full week of the year. Whole squad's here hanging
I
out,
know.
back on the stream.
It's been a while since this has happened.
I know the trio effect.
Yeah.
Speaking of which, Frank, you were just talking about individual stocks. I was going to ask that exact question to Chris today. Chris, is this year a stock pickers market?
I was going to say no. I'd rather reduce the volatility by trading the indexes and generating the income where I can, like, I'm going to go for individual stock income opportunities, but not necessarily individual stock picking. Because look, I think stock picking, you can see the reward of stock picking with a bull market like we saw in 2024. Like, I mean, like Carvana, I was talking about this morning. Carvana was up 8,300%. Palantir was the best performing stock at 340 some percent. We saw lots of triple digit gainers last year. Like, stock picking in a bull market is a lot easier than stock picking when the volatility could be 2 to 3 times the index. That's my concern, is if you pick the wrong stock, the thing could be down 40, 50, 60% because it's so overpriced, it just gives back a bunch of the gains. So
that's a good point. But
I'd rather trade indexes.
Think about it this way. If we're thinking about 2024, 2023, the narrowness of that market made stock picking individually like really difficult. Like the chances of you unless you pick the Mag 7, which was really easy to pick.
Right.
If you picked those, then you outperformed. Right. But I wonder actually if what Frank is saying, like if you actually get a broadening, maybe there's more stocks that actually outperform the index. Maybe tech doesn't necessarily, lead massively this year. And maybe, you pick I'm just going to throw a random stock out there. Let's say you pick like a Costco, or you pick like a Delta Airlines. I don't know, like you pick some names, and is there a possibility that if you get a broadening, like maybe the index is up 10% this year, let's just throw out a number, and there's some great companies that have lagged behind that go up 20. I mean, well,
tell me something that's lagged behind. Like, I mean, Costco's not lagging behind. Like, I mean,
Fubo.
What's that?
We had energy stocks as well.
Okay, I'll give you this. I'll give you energy. I'll give you energy as like a lot of stocks getting beat up. I'll give you small caps because 90% of the Russell is unprofitable. My concern is like stock picking what looks value is trash. Like, you're picking unprofitable companies that haven't performed in a 2-year bull market for a reason. That's my concern, is that you're dumping capital into what looks like it could be good on paper, but is not performing for a reason, and you're just going to be stuck with dead capital. That's my
fair.
only
I think
concern.
Maybe a middle ground too could be, maybe picking some sectors. I mean, you lit up on energy. I also like healthcare in 2025.
Yeah, so healthcare.
Those are contrarian sectors, so maybe you can avoid the individual stock picking part. Because even like for example, Pfizer's been a tough one. I've been playing that one. I know you have as well, Chris. Like it's been difficult to pick, but perhaps like sectors and sector rotations could be something that, I mean, we have been preaching this for a long time. I know Frank and I have been, trying to play the Russell. You too, Chris. I'm thinking that 2025, maybe we actually see it. Last year, I think I was early on that call of like Russell's going to broaden out, but year 3 of a bull market, if inflation doesn't go crazy, I think inflation, if it stays where it's at or goes lower, could be, a better environment for the Russell than we've had the last few years. Russell lagged big time last year. Who knows? Maybe some of the Trump policies favor domestic companies, but for one reason or another, I think that the Russell has good upside room to it. But I also wanted to jump on, make sure we move along. We got a ton of projects that we're working on behind the scenes, so I'm going to kick Frank off so he can go help us out on that side. Frank, thanks for tuning into the show, hanging out for a little bit, and we'll see you next time. And keep going, Chris.
Let's do this again, Frank.
Yeah,
don't be a stranger. All right, Nick,
Chris,
you hanging out?
What else? So sector rotation. So no individual stocks for you, or just limited individual stocks?
Limited,
Okay.
Limited. And I think my goal is like, if I'm limited stock ownership, it's going to be income. Like, look, already I'll tell you most of how I'm going to feel this year. MicroStrategy just today, having the big rip that it did, I own MicroStrategy with a break even of $290, $289. Right now it's
Oh,
like,
nice.
well, cool, I'm up $80 a share. Well, no, I'm not, because I added a covered call. So I'm actually only up like $15 or $16 net. And I'll
Where's
just
your
work
covered
the
call
income.
at?
Like,
Where's this call you sold? You sold
well, so
390 calls?
it was this. No. It was I bought the shares,
Yep.
and then I sold a call, an in the money covered call to lower my cost basis.
Okay.
And then I
cool.
added a collar trade. So I have a 305 by 245 collar trade that now is I
Okay.
updated this morning. So MSTR, this morning, I bring my cost basis down to 288.47. So 288.47. Now,
Yeah. Chris, I've got an IWM play open.
okay.
I shorted puts on IWM, looking okay on that. I actually rolled it up, really true to the tasty gang over there.
Yeah.
I shorted puts to I think 211, rolled those
Okay.
up to 215. That's
Look at
kind of a
you.
principle that they love to preach, is roll up and out, or
Yep.
down and out. Or
Yep.
I love that principle. Works great if the market's going up and away, but also, I love their concept of like juice up the premium pretty frequently,
Yep.
just kind of stay with the trade. So playing the Russell, I had a lot of strangles that did great last month. Looking to potentially, if we start taking out new highs, I'm going to I liked what Frank was saying about the all-time highs. I'm kind of the same way. You start getting above the all-time highs again, I start looking at things to potentially sell calls or covered calls on. What about you? When do you know when it's time to sell the call side? Because I'm more picky, right? It's really hard.
Look, the best rule of thumb is on the call side. So look, I'm already, MicroStrategy and Nvidia, I'm already in the money on my calls already. Like, they've already blown through my levels where it's like I can't really roll them much more than what I did today. Like, I got an extra 250 out of MicroStrategy to increase my bottom line. I got an extra, I don't know, dollar. What did I lower my Nvidia? I lowered my cost basis by another couple of dollars this morning. Nvidia was, where is it at? Right here. Another two. So I'll get another $2.50 roughly per contract, which is fine. But what I know that I won't do on Nvidia is I can't keep like rolling out and up. It's like it's kind of locked in for the profit's kind of locked in within like a couple of dollars extra here and there. But I think that Nvidia is going to be a good example of what kind of all-time highs look like on the stock market. If Nvidia comes back to test this high and gets everyone all excited, and then it just goes right back down, that there's going to be a lot of volatility in the market that way too, right? If Nvidia pops up here and fakes out at the highs and then baits everybody back up, and then we have like that turtle head poking out and it comes all the way back down to fill some gaps. If we see a big red sell-off in Nvidia, the SPY's going with it. Yes, it's like the stock market will do the exact opposite. But order flows early in the year are really common. So right now, what's everybody doing? They're putting on their leaps. They're doing their out of the money this, or they're putting on all these like longer term positions where it's like it's just people are establishing bullish positions because this is what the market historically does. So I can see why it's getting a bit exciting. I still think technically the bar count on Nvidia is quite high. So, it goes higher. Cool. I'll make some income. I just want to keep the stock plays with protection. I think you're spot on with like do a lot of cash secured puts. If you want to own anything like cash secured puts or even define risk, like the simplest way, Nick, would be like just do a credit spread, and go out of the money credit spreads, like, 25 delta, 20 delta credit spreads. If you could collect like, let's say 20 cents in the dollar, which I know doesn't sound exciting, but for income and no ownership, I mean, a 20 delta is like only going to get assigned probably 15% of the time. I know it's a 20 delta, but it's usually overstated. So
that's
about a 15% risk of assignment.
101, right?
Yeah. So I think that's a good way for income this year. I wanted to do, I'm actually looking at building some scans out for some of my implied volatility on what stocks are good to be, selling premium on right now, what stocks are good for the either, cash secured puts or out of the money credit spreads, or even covered calls. My rule of thumb for a covered call is if I'm putting a call like, at current price or in the money, it's because I'm looking at an income trade. If I want the price appreciation, then I'm typically doing like a
Out of the
15
money.
delta, 20 delta. Like
Mhm.
I'm keeping it out of the money. If price
Yeah.
goes higher, it goes higher.
I'm doing that right now, Chris, with
Okay.
Google. I'm looking at Google back to its highs. Check out
Okay.
my screen real quick.
Yeah.
So I've got Google near its highs. I own 100 shares, and I'm thinking the same thing. Do I want to, what you're talking about, play the income, which for people in the audience who are maybe newer to options, if I were to sell a call right here, I'm selling the right to my shares at, let's say, 197.5. If I sell a call right now and the market goes up, I see no upside to that. However, I do get paid a premium up front just for selling the call.
Right.
So I could sell calls like you're saying, Chris, just create some income here. Or what you're saying when you say stock appreciation for the options newbies out there. Let's say I sold the 204 calls. I make money on my shares up to this point, but then anywhere past that, again, I've sold the right to my shares. I collect a premium there. I typically go towards that direction. I usually, when it comes to these monster uptrends, Chris, we just both laughed at how hard it is to try and figure the call side out, right? Yeah. Selling the calls in a bull market is very difficult. So I typically take where I think it's going to go and I add a little bit more to that sell call there. That's my grand strategy. Look at, but with Google, we start poking up towards these levels. I'm probably going to start selling some calls. We're getting a little extended here, but up 3% on the day. Google looking good. Chris, do you own Uber?
I did. I haven't had Uber in a while. It's been a little bit.
Well, that's probably been okay because it's had a real rough couple months. It's finally
Uber to me was a 2022 story. I got like the COVID lows. I did Uber during COVID, and then once we revisited those lows in 2022, I took a nice little swing trade here. So low, high, higher, low, higher, high. We got back into this chop. I took it was like 100%. It was a triple digit winner. But nice. I didn't get that run on Uber, whatever. So now, I mean, I just see some of that like $60 to $80 zone. Let me see what the fair market value is on Uber really quickly. Also, I don't know if anybody saw this when I had the screen share up. We have a 10+% correction about 1.7 years apart. So I'm expecting, like, we had a 10% correction last year with that little volatility event in August. Don't be surprised to have another double-digit pullback. If the market's going to throw 10% to the upside or 15% to the upside, it's usually about, for every 8% that you get to the upside, you're getting like a 13 to 15% drawdown. So if you're expecting a 10% rally, then expect a 15 to almost 20% pullback at some point in 2025. Yep. Just throwing it out there for the reality check of, like, the market does not go up without having pullbacks, and there's the elasticity of the market. Let me go to Uber for a second. And, I mean, a company has some brand recognition when it's the verb. Like, ride share is pretty much, I'm going to get an Uber. I mean, it's Uber or Lyft, right? That's what we pretty much have.
It's got the brand recognition to it for sure.
Yeah. So below estimated values, forecast to grow, insider selling like crazy near the highs, price to earnings, price to sales, not terribly expensive. I mean, honestly, so discounted cash flow wise showing like there's still a lot of upside in Uber. I don't know. This actually, it looks pretty good, Nick. Not gonna lie, dude.
I own some shares.
I like it.
I sold cash secured puts, got assigned on it, so I'm sitting in the shares, seeing what happens next. But
okay,
Chris, if you want to continue the show, keep going. I got to hop off. I've reached my limit of time here, but you keep going if you'd like to, as long as you'd like, and then I'll catch you up on. We'll try and do this more often. I want to get back on with you and Frank more frequently.
Yeah, this is great. Yeah, I'll go for a few more minutes. Yeah, I'll go for a few minutes.
All right.
Thanks, Nick.
See you, man.
All right, thanks. So Uber, I think Nick just talked me into a trade. This is going to be another similar situation. If I take any assignment, I'm going to look at probably a ratio spread here. So Uber has earnings on February 5th. I'm going to go out through those earnings on the 7th. Okay. So a couple ways to play this would be, if I go out, let's say 46 days, and man, those premiums are really bad. Unless I'm in the, so I pretty much have to cut it off around like 55. 55 is a decent discount. They get me back to this little August low that we had last year. I could see something like this if we have kind of a broadening pattern look. So, would I be willing to take some shares of Uber? Sure. If I do a credit spread there, then that's income. If I do a ratio spread, it's probably higher credit. Be willing to own the shares, take on the shares, and then trying to think. Take on the shares, put on a collar trade, turn it into income. I just think I'm going to be very, very protective of if I own shares. Like Uber's not expensive. I can own this in pretty much every account that I manage. I mean, I like the upside potential, but we'll see where the premiums are at. So could I do 55 by 50s 250? Let's see what this looks like. That's awful. This one's a little bit better. A 5750 by 55. So if I took ownership of this, let me see. Could I do like a really inexpensive put? Probably. This isn't bad. Let me see what the ownership price would be. So if I took assignment, I get this backwards. Yeah, that's what I thought. Fudge. So, I mean, I'm almost better off just doing puts. Let's see. I don't really want to take a ton of shares of it. What's a credit spread? If I did a 60 by 55, 80 cents a credit, I could take the assignment at 60. I'd own it at 59.20. It's a decent discount. I think a ratio spread still looks better. Let me go out farther. So February, let's go out to March. Maybe a bit more premium. Buy the 55, sell the 52.50. 25 cents. Gosh, it's so bad. 39 cents. I mean, we're trading at 67. I'm surprised with the IV rank at 47 that I'm not getting better premium. This thing pretty much runs out of gas as far as put premium, around the 17 delta. I mean, that spot's not bad. That's not bad. I mean, I could go 200 shares of Uber, tie up about 6 or 7 grand. I mean, I think there's a built-in resiliency to this. Like Uber is a household name. People are, I mean, any ride share, it's like it's Uber or Lyft. Let me have a look at the stock price. So I don't mind it. It's had a pretty darn good run. If I'm going to take any assignment, I want it to be below $55. So there's a 57.50 and a 55. If I took on the shares, I'd have 200 shares plus 55 divided by 2. I'd have 200 shares at 56.25. So it's not a bad play. I'm willing to do this for my portfolio margin accounts. And then if I own it, it's going to be a collar trade. It's going to be a repair trade. It's going to be, give me, let's say I have 200 shares, give me $5 of appreciation and I'll make $1,000. Like I'll just basically flip the stock for $1,000. If this year I do that, I don't know, let's say for a stock that I kind of like and I'm willing to, I mean, it's not giving me a lot of premium on this. So like an at the money call isn't bad. I mean, getting $4 to $5 for an at the money call is pretty favorable. So I could easily turn this into $5 a share. The question is, if I do that, could I do that 5 times in a year and have, Uber and, let's say 10 other stocks make me 5 or 10 grand a piece? It's like that'd be kind of the plan. I mean, I don't know. I'm just for my mindset this year, I'm already prepared for like, it's going to be a grind. And maybe the pleasant surprises to the upside, but I think it's going to be a grind this year. So I'm just kind of preparing for it. This isn't a bad trade though. 200 shares, I think it's fair. That's decent. If I did it here, I'd own it. Where would be the break even? So I'd take 60 and 57.50 divided by 2. I'd own it at 58.75. And the premium I would collect would be $3 on that. So minus 3.18. I mean, that's about where I want to own the shares. So if I did a 60 and 57.50, now I get $3 of income. I kind of like this trade. I think I'm going to take this trade. So I would do the 60 put and 57. That is a 24 delta and an 18 delta. I get over $3 of credit. So if I don't get assigned, then I still keep the income. This is out to March. If I do get assigned, my break even is 55.57, and I would take the 200 shares. I would sell a call above. I'd buy a put below, own it at 55 and change, try to get it called away for at least $5 a share. So try to get, $1,000 to the upside, protect the downside. If I'm able to protect the downside, then obviously I'll increase it. Maybe 5 goes to $10 if I want to buy the discount. So that's not bad. I think I'm going to take this trade. So I've got some decent cash. 1, 2, 3, 4, 5. These 5 accounts, I'm gonna throw that in. So 315. I'm gonna sell the 60, sell the 57.50. See if I get 315. And let's go after that. So right now, what's the actual bid price? I want to make sure I'm getting a slight premium. 126 plus 186, 312. Let me see if I can get a slightly higher. I'd love to get a few cents more if I can. 315. Let's try that. Not filling. 314. All right, got filled for 314. Similar order. Getting filled there. Getting filled there. 1608. And 336. Okay, so that trades in. That's going in Pulver alerts. I'm going to add this into my personal tracker. This is Uber. And okay, so I'm selling 321 expiration. Sell the $60 put. Sell the 57.50 put. 3.15, 3.14 credit. Willing to own. Break even would be, so I take on the shares. So 60 plus 57.50 divided by 2. I'd own the shares at 58.75 minus the 314. I'd own the shares, 60 plus 57.50. 58.75 minus 3.14. 55.61. Okay, so willing to own at 55.61. I do have an earnings play that I've got to consider. I may, as we come closer to earnings, I might put just a long put, go out like 30 to 40 days on a long put, just in case Uber does not have a big upside earnings print. If for some reason this thing starts to drop, then I need to make sure that I at least have some protection to own this thing as cheap as possible. So, I like the structure right there. We come back in and kind of tap these 2022 levels, this August 2024 level. But I think upside, Uber looks pretty good. There are some, there's some challenges ahead, but I think when you've got one of the only kind of real games in town, like what would be the trouble with Uber? I don't know. I mean, it's not crazy overvalued with price to sales, price to earnings. There's been a lot of insiders selling at all-time highs, which I think makes sense. Yeah, I don't know. But earnings are growing. It's crazy profitable. Fundamentally looks pretty darn good. There's just no dividend. But, I mean, financially healthy. Past performance has been solid. Future looks good. I like it. I think that's good. Thanks, Nick. Okay. So that is a 321 expiration. Sell the 60 put and sell the 57.50 put. 3.14 credit. Willing to own. And if I did take assignment, it's going to be a break even around 55.61, which is right back to the August low, which I think is fine. And if I take assignment there, I'll work the cost. So as we get closer to earnings, like I said, I'll probably just put its own protected position, just in case it goes against me. So that way, if I do have a negative earnings print and I get assigned on anything, I want to make sure at least I have a long put that's running for some additional profit. So we'll see. And that can just come off the break even. All right, so that's going to be added in. That'll probably wrap it up here. I've got another class in a few minutes, and I got to get on the call with the Tasty Trade desk, because I don't know why they did something with Pfizer that I had. So I need to get that resolved. So, all right, let me get this posted in the alert section. This one's going under my stocks options trades. This will be new trade. Uber, 321 expiration, selling the 60 put, and then selling the 5750 put, 3.14 credit. Willing to own shares. This is a simple cash secured put trade. If Uber is greater than $60 by expiration, keep the full income of 3.14. If Uber is less than 5750 by expiration, I will be assigned shares at $60 and 5750. Ownership break even will be what I say 55 and change, 55.61 will be 55.61. And I'll add a collar or covered call to repair for income. All right. So that is going to get added in under my Pulver alert section. There we go. And a screen share, and I'll let you go for today. So if companies look profitable with upside potential, good earnings, good fundamentals, that's probably my biggest thing this year. It's like, I don't want to just pick beat up stocks. I don't want to pick just what looks to be value. I think the energy sector, because it's so beat up, could be attractive. I'll bring this up if Nick and I talk again this week, but I think the bond play might be a good one for 2025 into 2026. Is getting like a TLT. You know, the Fed's been controlling the short end of the curve. But man, we've just seen lower lows on bonds and higher yields. And I just think that at some point this potentially breaks. I'd like to say I'm going to get long on TLT if it goes back down to these lows. It could certainly go lower. But given that we've been in a 3-year drawdown in bonds, something tells me that the risk that investors are willing to take on the stock side and equity side is way higher than the yields that they're potentially going to be getting. Obviously, the market can stretch. Obviously, the market can still stay bullish. We can still eke out another gain this year. But something tells me that the bond market's not going to be in a drawdown forever. And maybe I look at a synthetic play out to like 2026 or longer. I might go out like freaking 2 years in this and just give myself a big fat window and somehow see that like the market breaks and the bond market becomes like an attractive investment all over again. So I think I'm going to look at that today and maybe discuss it more tomorrow. So, all right, I'll let you go for today, and let's come back and do this again. All right, thanks, everybody. See you.
Thanks for watching today's A1 Trading Show. We hope you enjoyed, and we're excited for a brand new year of trading with you. If you're new, consider subscribing for daily videos and live streams all year long. Be sure to check out the description below for our latest deals and offers. 2025 is just the beginning of our best year yet. We'll see you tomorrow.